Ladies and gentlemen, it is great to be back in Firenze and in Palazzo Vecchio. For me especially because as a young assistant professor at the University of Helsinki, I had the pleasure and honor to be the examiner of Niccolò Machiavelli's works, and I could very well feel Il Consigliore stepping in the corridors of this palace, or maybe in some of the back rooms rather than in the corridors. But don't worry, I will not quote the ultimate realist Niccolò Machiavelli. It would not be very appropriate on the Schumann Day, on the Europe Day. Especially I will not quote his saying that it is better to be respected than loved. That would be totally inappropriate and even completely incorrect in the case, especially in the case of the European Commission in these days. So, dear friends, I'm glad to discuss with you the optimal design for economic governance in Europe. And in this context, I must say that as an ultimate functionalist, even as the last functionalist in Europe, in my view, we cannot discuss the institutional design of Europe without discussing the policy objectives at the same time, because I believe that form follows function, and therefore we need to first recall where do we stand as regards our overall policy response. Which one? This one, okay. Here we are. So, the reinforced economic governance is a key element of our broader, more comprehensive policy response to the crisis, which is indeed, as was quite clear from Daniel Gross' presentation, a severely intertwined combination of the sovereign debt crisis and banking sector fragilities. And we have already taken significant decisions concerning reinforced euro area financial firewalls, concerning a better regulated and better capitalized, more resilient banking system, as well as taken consistent action on fiscal consolidation and structural reforms in line with Europe's 2020 growth strategy. And it is very clear and fully realized that it is indeed economic growth and jobs that are dominating the minds of Europeans today, also in this Schuman Day or Europe Day. In response to the crisis in the past 1 or 2 years, and it's only 1 or 2 years still, national fiscal and economic policies have become more and better coordinated. In fact, the rules of new economic governance already entered into force last December, and these rules and their practices are already being implemented. The reformed Stability and Growth Pact and the Member States' commitment to the Fiscal Compact Treaty are essential elements of this. In fact, in this context, I would like to recall what Walter Hallstein, a constitutional lawyer and the former president of the European Commission, said already 5 decades ago when explaining the European project. Quote, in building a customs union and an economic union, we are also achieving political union. Our motive has been political since the launching of the European Community Initiative in the Schuman Plan. Furthermore, we have created federal institutions distinctly political, from which emerges a new economic and political entity, unquote. This is at least as true today as it was 50 years ago, and this was illustrated by the fact that in the final weeks of last year, when investors' confidence in the euro area action reached its lowest level, the EU leaders decided to choose deeper integration and a closer economic union instead of giving up to the threat of gradual disintegration. And this closer economic union is currently in the making and partly already being applied and utilized. So, ladies and gentlemen, our policy response to the crisis is now focused on three particular elements. First, we must strike the right balance between the necessary stabilization and the rising concerns about economic growth. Progress in cutting deficits is significant, though debt ratios are still rising. Fiscal consolidation must be pursued in a growth-friendly and differentiated manner, in line with the provisions of the Stability and Growth Pact. And the pact is not stupid. Instead, it underlines the structural sustainability of public finances over the medium term, and it implies a differentiation among the member states according to their fiscal space and macroeconomic conditions. Second, we are in fact already witnessing certain adjustment of macroeconomic imbalances and divergences of competitiveness, as can be seen from this slide, which is based on fresh data which we will actually present on Friday in the context of the Commission's spring economic forecast. The process of deleveraging is ongoing in those member states that have built up high debt, both high levels of public and private debt, and especially of external debt. They are the countries that are marked in yellow. This rebalancing process inevitably will take time, but it is going on now. And in this context, I want to say that I find the ideas Daniel Gross presented as regards a banking union certainly very pertinent and worth considering very seriously. The EU member states need to support this rebalancing trend with comprehensive structural reforms, as is done in Italy, for instance. Several member states need to reform their labor markets, improve their business environment, and make their tax system more employment-friendly, more job-conducive. We must also take action together to harness the still untapped growth-enhancing potential of the single market. And third, we must complement our structural reforms with targeted investment to boost sustainable growth and job creation. We need more cross-border and community investment in Europe in energy and green growth, in transport and communication, as well as in research and innovation. And since the private banking sector is deleveraging and under stress, there is a major role for public banks like the European Investment Bank and for public investment, not least to stimulate and boost private funding for investment projects. And we are making progress in this field. The project bonds for infrastructure investment, which the Commission proposed last year, are now moving, and I expect that we can start the first projects in the course of this summer. We have proposed an increase of the EIB capital base, which is the most rapid and effective way of increasing large-scale investment in Europe, and this is gaining support among the shareholders, i.e. the member states of the European Union. And we have already partly done reprogramming of structural funds to turn them partly to guarantee funds for small and medium-sized enterprises which have serious concerns of access to finance in tightening credit conditions in many parts of Europe, including Italy. So, while the single market remains the growth engine of the European economy, we need the necessary additional fuel to make this engine run more effectively, and this has to be done fast. Finally, ladies and gentlemen, I am conscious of the academic audience today, and therefore I would like to conclude with a look beyond the immediate horizon and encourage you to start reflection about the kind of European Union that would be required to allow joint issuance of debt to make sense for all member states and their citizens sharing the common currency, sharing the euro. The Commission Green Paper on stability bonds, or in a less Orwellian way, Eurobonds, from last November needs to be followed up soon, ideally with a medium to long-term roadmap outlining a way for deeper economic integration. Or in other words, what are the features of an economic, fiscal or political union that are required to make the mutualization of public debt rational from the point of view of all EU, or at least euro area member states. As joint and several guarantees should ultimately be called in only in extreme tail events, in extreme circumstances, this basically means that Europeans would guarantee each other in terms of the continuation of the essential functions of government, which will require a very fundamental debate about the rights and responsibilities of respectively of member states and the community or union that is pooling its risks together. So, ladies and gentlemen, Europe is reaching an important turning point. We need to stay the course on economic stabilization and at the same time strengthen actions to boost sustainable growth and job creation. And I count on you to contribute to our common endeavor by developing ideas and impulses that will help bringing forward the European project. Thank you for your attention.